President Donald Trump on Wednesday announced a 90-day pause on his reciprocal tariff just 24 hours after it came into effect. Trump's latest move was seemingly an attempt to narrow down what was building up into an unprecedented trade war between the US and most of the world. Well, global markets, of course, reacted positively to the news. However, he announced an immediate increase in tariffs on China to 123%, up from the previously declared 104%. Now, traders are looking at a number of theories to explain the moves in the bond, whether it is ranging from forced selling by hedge funds, getting margin calls, to more troubling speculation of foreign holders dumping US government securities. Now, the largest holder of treasuries are Japan, China and the UK, the very countries that US has targeted with some of the highest tariffs. Now, if Chinese and the other foreigners start to sell the US securities, how is it likely to pan out in the bond market? To weigh in on that, we are now joined by Freris, Andrew Freris, who's the CEO of Economics Advisory, joining us live from London. Hi, Mr. Andrews. Thank you so much for joining us today.
Thank you.
Mr. Andrews, this announcement of a 90-day reprieve on tariffs has given a breather to the sell-off across markets. But is this really the time to start celebrating just yet?
Absolutely not. I think people must be very naive with incredibly short memories if they don't realize that they are dealing with the person whose main negotiating policy is to be completely unpredictable, to change continuously, to effectively lie, to say, I am not going to change, and then the next day changes. And somehow, naively, they think that for the next 90 days, they will be paying only 10% import duties in their exports to the United States. Yes, all the markets are up. I'm glad to see rather, in a way, and I'm just doing this right now, that the Sensex hasn't moved yet. Excellent. At least the Indian markets are sensible enough not to jump with joy on something that it is basically hollow. The rest of them, let them do it. They think that all is fine now and we are back to normal. No, we are not back to normal. And see also what happens as far as Mexico, Canada, and China are concerned. They are still stuck with well in excess of 10% tariff duties.
So there's no
Remember,
need to
this is not an opinion. I'm simply looking what Trump does. He says yes one day, and then within 12 hours changes and says no, and then says yes again, and then say no again.
Mr. Andrew, no time to celebrate just yet. Need to be cautious as there could be more further pain going ahead. But, the other thing, the important thing to watch out for, which Trump also alluded to, is the bond market. Now, traders are looking at a number of theories, to explain the moves in the bond market, whether it is ranging from the selling forced by the hedge funds or the speculation that the foreign holders are dumping US government securities. Now, remember, the largest holders of the treasuries are Japan, China and UK, the very countries that US has targeted with some of the highest tariffs. Now, if China starts dumping the US securities, will we see elevated bond yields? Will this lead to a bond market challenge?
China is the second biggest holder of both of government bonds and of treasury bills, following Japan. Should China decide to sell all or part of it, it could really deliver a colossal blow to the United States for two reasons. First, interest rates in the United States will go through the ceiling. Remember, bond yields on the 10-year went by about 40 basis points within few hours, 40 basis points. Okay, since then, they have not fully recovered at all. The idea that the bond market has recovered is just not true. Okay, so should the Chinese decide to sell part or all their holdings, they will force on the United States an enormous increase, possibly double the yields, if not on long-term yields, and that will make it impossible for the Fed to cut interest rates, which is what Trump wants. The second thing, of course, it will devastate the US dollar. because the Chinese will sell, will receive US dollars, and then they will promptly dump them because they will want to switch the money into renminbi. So the Chinese have not done that yet for possibly two reasons. One, they want to keep their powder dry, and they want to bring a surprise to the table if Trump decides to continue being tough. And the second point, of course, if they were to do it, in a way, they will also shooting themselves in the foot because they will carry huge losses on the several billions, hundreds of billions of U.S. treasuries they're holding. So they have to be a little bit careful. But as a gun, it is incredibly effective. The markets know that, and that's why they are dumping before the Chinese lose patience, and they says, okay, now it's our turn to play tough. That's why the markets are not really truly recovered on the bonds. And that's why, as you rightly say, hedge funds in particular are dumping American bonds. And sorry, I will have one more thing to say. These several hundreds of billions of US dollars in American bonds is the surplus that the Chinese have built with trade in the United States. So in other words, not only they sold cheap goods in the United States, but once the Americans needed money to pay for that, the Chinese lent them money and they funded the fiscal deficit of the United States. I hope Mr. Navarro is listening to that and this nonsense that the Chinese are ripping off, are exploiting, and are raping the financial system of the United States. On the contrary, the Chinese are major supporters of, for their own good reason, of course. The Chinese are not angels, okay? But it is factually just not true. The amount of nonsense that has been spoken about this financial crisis is absolutely staggering, and it is about facts, not opinion. The Chinese are major contributors to funding the fiscal deficit of the United States, and they do that by letting the Americans have nice goods for which the Americans paid on credit. And that credit goes to fund the American government. Simple.
Mr. Freris, that the Chinese are actually contributing to the fiscal deficit of US. But, like you mentioned, that this whole bond market challenge could be catastrophic for the US. In fact, the dumping of bonds, US Treasury could be, could have a catastrophic effect on the US economy, which has significant headwinds already, and there are growth challenges. Now, recession or growth slowdown in the US will mean it will have a ripple effect on the other economies as well.
Well, as it stands right now, if the American economy, now we have to be very careful not to use the word recession lightly. Recession globally is considered to be 2 quarters of negative GDP growth quarter on quarter, but back to back. The likelihood of this happening anytime now is relatively remote because for the time being, the American economy is not doing badly at all. Now, it will not be able to continue doing good or as well as they're doing, one, with the financial markets being in a complete chaos, and two, with the likelihood that if the Chinese should decide to, they could absolutely put an atomic bomb underneath the financial system in the States by selling all their holdings, of course.
Right. Also, Mr. Freris, the US dollar index is on the back foot, which continues to stay hammered under the 103 mark. Now, with these tariffs and once the US economic data starts to turn, the dollar index might see some more selling pressure coming in. That could mean a further weakening of the greenback in the coming weeks or months.
Well, look, the interesting part, and obviously Mr. Trump and his advisors are not paying attention to that, it is the Americans themselves, the Americans themselves that are selling the US dollar. It's not these evil creatures in Asia and across the world that they are raping and gouging the American economy. Okay, so the Americans themselves are losing faith, and this is at long last an indication that they are losing faith on the president they just elected with a significant majority, okay, only 3 months ago. Yeah.
Right. One final word, Mr. Freris, now that, amid this turmoil, all the all the fund managers will be forced to rejig their portfolios or re-look at their portfolio or their allocations. Which of the markets do you see now would be a preferred bet? Would India be a preferred bet, given the fact that our valuations have now, come down to, have moderated, if not in a comfortable position? I mean, there has been considerable FII selling, and there has been fair bit of a correction in the Indian markets. So valuations are ripe. Also, with the tariff news coming in, India is relatively better positioned, especially with regards to China, which has much higher tariffs, and with India is a big beneficiary of the China Plus One strategy. So do you see the FIIs to now see India as a viable, a more profitable market?
Well, we have to be very careful here. I have done my numbers, and at least I talk on the basis of facts, not on opinion. In the case of India, exports to United States account for about 4% of India's GDP. Very small. If India loses half of those exports, that will lose 40, roughly, let's say about 200 basis points out of GDP. This is not the same thing as GDP growth falling. That's an altogether different proposition, but the potential loss in terms of lost exports, that's very little. Okay, genuinely very little. 2% loss of GDP, if half the exports to the United States disappear overnight, it's going to leave India still with a very substantial potential of good, strong GDP growth. Hence, this is not particularly good news, okay, because India, in any case, was never export dependent and export dependent on the United States. So bidding on that is not necessarily a safe haven. In other words, one has to buy India on the basis that India itself, okay, unrelated to the United States, is going to be a good bet. Well, now the Reserve Bank of India has just cut interest rates, which is useful. Okay, the overall performance of the Indian economy last year was quite strong. So the answer is yes, but now it will all depend on valuation. Okay, and it would all depend on India not imitating everybody else and going begging on knees to United States, but so I hope Mr. Modi shows that he's the leader of the largest, in terms of population, economy in the world, possibly the third or fourth biggest economy, and he will tell the Americans, you can do anything you want to protect your own interest. I am protecting my country's interest, and I'm not negotiating anymore. There is no need to negotiate. That will be an incredibly strong political move on part of the Indian political system, not in defying the United States, but in showing pride, independence, and faith on something on which they can have faith. India is not dependent on trade with the U.S. This is not a matter of opinion. It is a matter of fact. That will be a huge plus point to put on the table. Not to fight the United States. Best thing to do, ignore it.
Right, Mr. Freris, this is a very interesting take that a very interesting point that you made, that because India has just barely 2% of the GDP as exports to the US, India need not really negotiate or, strike any deals with the US and send out a rather strong political message by not negotiating on the tariffs.
Absolutely.
But if that is the case,
Absolutely.
and if India is relatively better positioned as far as this is concerned, then do you see better days ahead for Indian markets? Because up until now, Indian markets have been underperforming in their global peers. So we have corrected fair bit from our highs. Now, is this the right time for Indian markets to start becoming more lucrative, because the dollar index has cooled off, the oil has also come off sharply. All of this augurs very well for Indian market.
Okay, let me correct you one thing. My last calculations were based on about on data from 22, 23, partially 24. Okay, they are not absolutely fresh, but they are correct. And the calculation is that Indian exports to United States account for about 4.2% of GDP. All I'm saying is, suppose we lose half of them, okay, then the blow on India is going to be 2% of GDP. Survivable, no problem at all. Is this a good reason to buy India? The answer is in a perverse way, it might not be, because if you're buying India because you want to escape what is happening on the United States, well, that's a kind of a negative reason. Okay, I want to buy India because India has to offer me things other than its relationship or no relationship with the United States. Because remember, that thing changes continuously. What if Trump decides tomorrow to double the tariff duties on India, despite the fact that this will not have a big, significant GDP impact on India? The markets, of course, we will read it very poorly. So I prefer if India tries to think in terms of buying India, not because of the US, buying India because of India. A big advantage that we're not dependent on the US. See, I say now we. Okay, I'm taking very much India at heart. So my answer to you is yes, okay, but it is preferable to see, and there was a good step that the Reserve Bank of India has cut interest rates, that the valuations may turn, okay, to look that India is an economy which is dependent domestically and not externally. And my answer to you is yes, of course it will make India more attractive, but it is a matter of selling it politically. You know, I cannot give advice to a democratically and hugely popular leader like Mr. Modi of what to do. Who am I to say that? But as an outsider, it says, go out. You have 1.3 billion people behind you. You have a huge economy. You don't need the states. Don't go on bended knees and asking, please, please don't put input duties on us. This is pathetic. I'm really sad to see Japan doing that and seeing a lot of other big countries going with a plate, begging the United States for mercy. Oh, how sad to see this. I'm not anti-American, please don't misunderstand me, but I'm actually appalled by the way in which an elected government in the United States is treating economics as a joke. We imposing tariffs? No, we don't impose tariffs. We double tariffs? No, we don't double tariffs. This is not serious.
Mr. Freris, point taken. But thank you so much for joining us and giving us your time on the show. Thank you so much. We'll let you go on that note.
It's a pleasure.
Thank you.